Hello traders, and welcome to the educational video titled the Head and Shoulders Pattern. Let's go ahead and explore this reversal pattern. So let me remind you that an uptrend is a series of successively higher tops and higher bottoms. So after we identify an established trend to the upside, an uptrend, then we can look for warnings that this uptrend is weakening, is running out of steam. And let's take a look at this. So during an uptrend, we see that a correction falls below a top. Usually that doesn't really happen during a healthy uptrend, but this is just a warning. Prices fall below the previous top, and then prices rise to form another top that this time fails to go higher than the previous top, right? Because remember, during an uptrend, each top is higher than the previous top. So a top that fails to go higher than the previous top, it's a warning that the bulls are running out of steam. Just a warning. So when prices fall below the line that connects the last two bottoms, when prices fall below the support level, then it's a signal that the uptrend has finished and a new trend in the opposite direction has just started, right? So let's take a look at the head and shoulders reversal pattern. The highest top on the structure is called the head. The top to the left of the head is the left shoulder, and the top to the right of the head is the right shoulder. As simple as that. Now, the line that connects the last two bottoms is called the neckline. A decisive close below the neckline will signal the end of the uptrend and the very beginning of a downtrend. Excellent. How we trade that? Well, we place a sell order right below the neckline and a protective stop loss right above the right shoulder. How we use to calculate the potential take profit? Well, Head and Shoulders has its own way doing that to calculate and estimate the potential profit level. We take the height of the structure, which is the distance between the head and the neckline, and then we project it at the breakout point. That is the minimum price target, as it's called in Head and Shoulders pattern terminology. Now, another way to do that is we take a sell order right below, of course, the neckline. We place a protective stop loss right above the right shoulder, and now we use the Fibonacci extensions to take potential profits. The first take profit level is 161.8, and traders might close part of their position here, then 261.8%, and then another part of the position may be closed here, and eventually for 23.6%, where the remaining of the position may be closed. Good, I hope you enjoyed. So let's go ahead and look at the inverse head and shoulders pattern. And let me remind you that before we attempt to identify a reversal pattern, then we have to identify the downtrend first. And a downtrend is a series of successively lower tops and lower bottoms. So during a downtrend, we might get some warnings, some alerts that the bears are running out of steam. One of the warnings is that prices rise above the previous bottom. And then another warning might be that the last bottom fails to move lower than the previous bottom. This is another warning that perhaps the bears are running out of steam. And eventually prices rise above the line that connects the two previous tops, the neckline. And a decisive close above the neckline will signal the end of the downtrend and the very beginning of the uptrend. Good, excellent. So let's take a look at the whole inverse head and shoulders structure. The lowest bottom is called the head. The bottom to the left of the head is the left shoulder, and the bottom to the right of the head is the right shoulder. Now, the line that connects the last two tops is the neckline. Excellent. And how we trade the inverse head and shoulders? Well, we place a buy order right above the neckline, and then a protective stop loss right below the stop loss, the last bottom. And of course, now we have to see how to take our potential profit. Inverse head and shoulders has its own way doing that by taking the height of the structure, which is the distance between the head and the neckline, and projecting it at the breakout point. This is the minimum price objective. Another way of taking potential profit is by using the Fibonacci extensions. So once again, we place a buy order right above the neckline, a protective stop loss right below the right shoulder, and of course we use the Fibonacci extensions for potential profits. Right, the first one is 161.8%, where we can take part of our profits. Then we close another part of our position at 261.8%, and finally 423.6%, where we can close the remaining of our position. I hope you enjoyed it, guys. See you to the next video.